Have you heard about the Fear and Greed Index? This indicator is quite relevant since it is more than an approach. It reveals what's happening in the market and inside investors' mind. If you are ready to get started, first of all, don't forget to subscribe to the channel, leave a like and share this content because this will help me really a lot growing the channel together. And now let's begin. The Fear and Greed Index measures two powerful opposing emotions that drive investment decisions, notably fear and greed. When the market is in fear mode, confidence drops, and many investors are worried about further losses. On the other hand, when greed takes over, investors tend to buy everything, worried about missing out, the so-called FOMO, fear of missing out. That is the flip side of the real fear that we just talked about. Just to make it simple, the index ranges between 0 and 100, whereas about 50 we can identify a neutral market sentiment. Yes, but how this index is built up? The index is built on 7 indicators, such as market volatility or stock price volume, as well as bond yield spreads. Here's a quick breakdown of all the components driving the index. First up, stock price momentum, that examines the movement of the S&P 500 relative to its 125 days moving average. Second, stock price strength, that looks at the number of stocks hitting new highs versus new lows on the New York Stock Exchange. Third, stock price breadth, that measures the trading volume in rising stocks compared to declining ones. Number 4, put and call option, tracking again the trading volumes for options to see if investors are hedging or betting on gains. Number 5, junk bonds demand, that compares the junk bond yields versus risk-free bonds, such as government bonds. We all know that risk-free doesn't exist, still it's a proxy. And this component shows the risk tolerance of the investor base. Number 6, market volatility, that uses the VIX, that is, let's say, a volatility index, also known as the fear gauge, to measure overall market anxiety. Last but not least, number 7, safe haven demand, that compares the return on stocks versus government bonds, something that we can also call risk premium. Now let's have a look together where do we stand right now. So, if we look at the Fear and Greed Index published by the CNN, we immediately realize that we are currently around the value of 41, which is a median value. This tells us that the market does not have a clear direction as of today. Going through the 7 indicators one by one, we see that, first of all, the ascending momentum, particularly visible if we pay attention to the moving average, is a clear sign of greed. Stock price strength instead signals fear. Note, however, that high capitalization companies can influence the precision of the indicator. The same goes for stock price spread. Looking at the option, the story changes drastically. In fact, indicators signal extreme greed, and note that a ratio above 1 is considered bearish. And on the contrary, now we are just above 0.6, therefore a bull signal. Neutral volatility, nothing more to say, just check the VIX trend. I start to worry about a value above 20, let's say. Lastly, safe haven junk bond demand signal fear. So, as we said at the beginning, we are in a market that has not taken a precise direction and is in a possible phase of adjustment. So, why should you care about this index? The answer is simple. The Fear and Greed Index can give an indication about possible market turning points. Historically, when fear is at the peak, prices tend to be oversold. And in those moments, bold investors jump in, finding the best buying opportunities. As Warren Buffett once said, be greedy when others are fearful and fearful when others are greedy. But how can you actually use this index? Think of it like a compass. When it is showing extreme fear, it could be the right time to chase for bargains or rebalance your portfolio with stocks trading at lower prices. On the flip side, when there is extreme greed, it might be wise to stay cautious. In other words, avoid buying at the top and regretting it later. Keep in mind though that the Fear and Greed Index is just one tool among many. and most importantly, doesn't guarantee the future. So it is no crystal ball. The index reflects short-term sentiment, but successful investing requires a long-term perspective. So be careful not to rely solely on this. And my tip here is to use it just to identify potential good entry points to leverage on market momentum. Ultimately, when the market swings between greed and fear, the best way to use the index is to stay calm and disciplined. Because remember, greed and fear are powerful, but you can be even stronger and use these forces for your personal benefit. Guys, we reached the end of the video. Thanks for watching. Before leaving us, don't forget to subscribe to the channel, leave a like and share this content to help me grow in the community and help me to provide more deep dives like this one. And now tell me, what do you do when the index hit extreme levels? Let me know in the comments down below. See you in the next one. Cheers!